Paul, as we were heading into break, I said we were going to be talking currencies. Clearly, we're talking energies here this morning. My mistake, but I want to get right into it. First of all, thanks for coming on this morning. I want to get right into it because the recent activity that we've been seeing in the energies markets, Paul, has been interesting, especially when we talk about the concerns that we've seen associated with some of the geopolitical concerns, potential concerns associated with distribution, but definitely some of the concerns related to EM and many of the financial concerns. But talk to us about how EM struggles, for the most part, has impacted demand and the energy markets and therefore impacted price.
Yeah, what's interesting, though, is if you take a look at it, there actually has been a little bit of a disconnect between EM and oil. So you mentioned the highs in the energy prices, and it kind of coincided with the highs in EM. And EM has sold off. It's now technically in a bear market with a 20% decline. Energy has come off some, but certainly not to the extent that emerging markets has. And we're now entering the season where driving is going to be down a little bit. We're seeing the changeover from the summer blend to the regular blend of energy. You're getting downtime in the refineries. Refinery capacity is very high, but you're winding up with high inventory levels. So the numbers from last week indicated inventories were up both on distillates and crude. Rig counts are going nowhere, haven't been now for 6 months. So I think we've got a little bit more downward pressure on energy in the near term here. And we could see, again, we're still range bound, but we'll probably visit that lower end of the range sometime in the next few weeks.
Paul, I'm going to try and be careful here and not try and connect too many dots, but I'm noticing the move higher in the crude. We also saw the last couple of weeks slowing some, but that coincides with some of the move that we've been seeing in the indices, which are rolling over some as well. Any correlation there?
It's hard to really say that because we've anticipated that commodity prices in general would be strengthening here, given where we're at in the economic cycle. We really haven't seen it. Energy's really been the outlier and actually has done very well this year. So you could say, well, it is trading in line more with the indices. But again, the indices are really driven more by technology stocks than they are anything else. And the underlying energy complex from the equity side have actually been trading very poorly this year. So it's hard to make that correlation directly between energy and the markets as a whole.
Paul, let's talk about some of the normal influences on crude, like the dollar and inventories, which continue to be kind of, well, again, for the most part, limited in terms of how much they've been able to influence price. Now, I'm wondering, should we expect energy markets to continue to be somewhat skittish, considering most of the factors that got us here seem to be, for the most part, taking some time to resolve?
Yeah, I think so. You've got some cross currents, but like I said earlier, I think we're entering a weaker season for energy as we come off the summer drive. And you've got inventories at higher levels, rig counts not doing terribly much. So you're right, and I think that's part of the reason why energy has really struggled after having a nice rally. It's really kind of struggled here. And what's interesting, strictly from a technical perspective, if you go back to the highs 3-4 years ago and then the lows in 2016, we're trading at about a 50% retracement. And then if you take a look at the gains that we've seen this year, and then from the highs, we're again at about a 50% retracement. So we've got a lot of technical headwinds here to get through, and I think that's part of the reason why we're really seeing the markets trade sideways. So the fundamentals would argue a little bit lower energy prices, and the technicals, whichever way we break, we could see a significant move in energy, but that may come later in September, maybe even October, before we see that resolve itself.
Yeah, Paul, I'm glad you brought that up because I pulled that chart right as you were saying it, and that's a really great look at the move down from that 110 area into the 26 and now back to 70 for the most part. Again, as you can see, right back in the middle, as Paul mentioned. Paul, this week we have OPEC meeting this morning, and then looks like the monthly report a little bit later on this week. Anything specific that we should be looking for to come from this one?
Yeah, OPEC would be the key, I think. When you take a look at Saudi Arabia, they've kind of pumped up their production a little bit and export to the U.S., and I think under a little bit of pressure from the administration. So I'd be interested to see really what OPEC is going to do here. They've been flexing their muscles a little bit. They've been able to hold a much better line as far as production goes. So again, I think OPEC is going to be a key for the next couple of weeks here on energy. The inventory levels have been all over the place, and it's hard to get the data points on a week-to-week basis. There really has not been a good trend there, but I think OPEC will be your key for the week.
So, Paul, we've got RBOB gasoline futures, which have been coming off some for the most part, well, at least more so than the other energy markets like Brent and WTI. In fact, last week, it traded back to levels we haven't seen since April. Is this just summer months driving demand kind of diminishing, or is there something more significant going on here?
Yeah, as we've talked about it, I think it is summer demand coming off. And again, we're getting into the fall season. I would expect that to slow down even more. And then going back to summer drive, that's declined here as well. You take a look at nat gas. Nat gas has come off here a little bit as well. So again, all of those I think are pointing to maybe a period of weakness here for the next 3 to 5 weeks or so in the energy complex, even though we're up a little bit here this morning.
Real quick, let's talk about some of the continued demand that we've been seeing as far as the U.S. economic situation and, again, just basically outlook, which continues to remain strong. I'm wondering if that continues to point towards the fact that we should, well, you mentioned here that you expect that demand for the RBOB to continue to come off a little bit. Is that, again, related to economic concerns, Paul, or more so just, again, summer and seasonal type activity?
Yeah, as we talked about, if you take a look at energy is really the strongest of all the commodity complex. And if you were arguing that the economic growth is still very good, and at least from the economic numbers it is, we should see a lot more strength across the board in the commodity complex, and we're not. So I think energy is kind of trading on its own fundamentals here. Certainly a little dollar related. As dollars picked up, that's going to impact the energy prices a little bit here because, again, it's all denominated in U.S. dollars. And then we're coming into the fall season. So I think really energy is trading on its own fundamentals and not really the economic fundamentals because, again, it's not confirmed by a lot of the other commodities that we normally would want to see much stronger if the economy is as strong as the economic data suggests.